Good afternoon, good evening, ladies and gentlemen. Welcome back to the session on IFRSs and IASs. Yesterday, we had a bit of a technical gizmo on our side. Today, we are back in shape, everything fixed. In fact, this entire room looks like as if we are going to launch a rocket to the moon from here. But all systems tested and we are live and go. Thank you very much for bearing with us yesterday. We will not take too much time again. Whatever was delivered yesterday will be available through a recorded webinar to all of you. So those who are facing issues will be able to view the recording, and those issues can be sorted out from that. Today, we are going to resume from where we left yesterday, and Mr. Abu Bakr is sitting right here with me, the learning objective 2. I think I'm going to not take any more time, straight away hand over to Mr. Abu Bakr, and I wish all of you a very, very active learning session on IFRS and IAS. Once again, apologies and regrets for the little bit of technical glitches that we were facing yesterday. Hopefully, you won't experience them today. So over to Mr. Abu
Bakr. Thank you, Mr. Harun. Assalamu alaikum. Good evening, everybody. I can realize the situation which we faced yesterday. So that's why I tried to cover yesterday concept through the poll question. So try with those poll questions. Those poll questions will be popped up from time to time, maybe after 15 minutes, after 20 minutes, and try to answer those poll questions. And when you will answer, then I will be able to explain if I feel that something need to be quickly revised from the yesterday session. However, coming to the today's session, in today's session, we shall be covering two learning objectives. First one, lessee accounting. No, not two learning objectives, three learning objectives. In fact, in Leases session, I decided to discuss with you four things. Yesterday, we discussed about whether a contract is lease or not, and today we will quickly revising that concept with the help of pop-up questions, followed by brief explanation of any misunderstanding if I felt. Today, first learning objective is like what is the leasing, what is the accounting for lessee under IFRS 16. This is first. Second is accounting treatment of the sale and lease back. And the third one is so far as the lessor is concerned, as I mentioned yesterday, there is no change, significantly no change so far as the lessor accounting is concerned. So we will be discussing that accounting as well towards the end of the session. Okay, let's come to the. I will request Mr. Harun to pop up poll question approximately after 15 minutes, and so that we could revise our yesterday's session with the help of those poll questions. Okay. Requirements of IFRS 16. See, yesterday we have seen that lessee accounting, very simple. Lessee accounting, that what you will do, I want to move it from here. Okay. We discussed step 1, that on initial measurement, instead of debiting the asset, previously we were doing under International Accounting Standard 17, But now instead of debiting the asset, we will be debiting the right of the use of that particular asset and crediting the lease liability. And we saw yesterday that how you will initially measure the right of use asset. So the right of use asset shall comprise amount of the initial measurement of the lease liability, any lease payments made at or before the commencement date, less any incentive received. So this is second. The third one is any initial direct cost incurred by the lessee, and an estimate of cost to be incurred by the lessee, dismantling and removing the underlying asset, restoring the site on which it is located, or restoring the underlying asset to the condition required by the terms and condition of the lease, unless those costs are incurred to produce inventories. See, except A and B, so far as C, D is concerned, this is the same concept as we normally apply to any fixed asset under International Accounting Standard 60. So this is not something new for right of use asset. This is the same asset as we have seen under International Accounting Standard 60. If there is any dismantling cost, if there is any initial direct cost, that will be added to the cost of that particular asset while initially measuring that asset. Then is the lease liability. Lease liability will be fixed payments less any lease incentives receivable, and variable lease payments that depend on an index or a rate initially measured using the index or rate as at the commencement date. B is very important. See, because subsequently we will be discussing certain additional concepts, so we will revisit this point number B if there is a need. Then amounts expected to be payable by the lessee under residual value guarantees, the exercise price of purchase option if the lessee is reasonably certain to exercise that option, and the payments of penalties for terminating the lease if the lease term reflects the lessee exercising an option to terminate the lease. So these are the components of lease liability. We discussed yesterday illustration number 12. Let's quickly relook at this illustration so that we could move from this illustration to the next illustrations. Illustration number 12. Illustration number 12. I suppose I will find very quickly. Illustration number 12. Just a minute. Illustration number 12. I cannot see. Okay, let me open illustration number 12. It should be here. Illustration number 12. Yes, it is here. Illustration number 12. This is already with you people. This is the same illustration. Illustration number 12. Illustration number 12 is like I'm trying to open it. So what could be the possible issue? It is not opening.
It's already open.
No.
All the documents are already open.
No, it is not there.
Can you close a few of them?
Illustration number 12. Opening. It is.
I have to close some.
No, it will take some time. No problem.
That's
Because a lot of files are opened. Illustration number 12. See, in this illustration, we have seen that the initial measurement of the lease liability. If you just can recall this illustration, so you will remember that there is a lease for an initial period, and there was an option to extend it for another period. But entity at the inception date, entity do not expect that they will be extending this lease period. So what we were doing, what we did yesterday, we initially recognized that lease liability and the right of use asset. Under lease liability, that was very simple, 500,000 for 10 years. We discounted using the implicit interest rate of 5% and the present value of those lease payments, that was our lease liability, and we credited the lease liability with this amount. Then when we talked about right of use asset, so as we have seen in the earlier slides, that lease liability is a part of right of use asset. In addition to the lease liability, there are certain other items, like we have paid an advance lease payment of 500,000, and then there is an amount of 200,000, and then there is a reduction of 50,000. So those items also become the part of the right of use asset. So initially we recognize right of use asset debit and lease liability and cash credit. So that was the initial measurement. That was the initial measurement.
Just closing all your documents.
Okay.
We'll open up one by one. This is the issue. We're just closing them.
Okay. So this was our illustration number 12. Now we will talk about what will happen subsequently. See, once right of use asset is initially measured and lease liability is initially measured, subsequently their treatment is different. As I just mentioned earlier, this was our entry which we done yesterday. Okay, let's come to the subsequent measurement. Subsequent measurement. Okay. So this was illustration number 12. See, right of use asset will be treated in accordance with like International Accounting Standard 16. Like if you have a machine or a building or a motor vehicle, those assets are normally treated using under International Accounting Standard 16. Likewise, this is also an asset. Right of use is also an asset. So this will be treated subsequently under International Accounting Standard 16 or International Accounting Standard 40. Like in case of property, if you have leased the property, again, that property is not asset. Your asset is right of use of that property. So this property can be investment property. In that case, that will be subsequently treated under International Accounting Standard 40. But if that particular asset is not an investment property, then that that will be treated under International Accounting Standard 16. Like if you decide to use the cost model, then you will be applying the cost model, and if you decide to use the revaluation model, accordingly you will be applying the revaluation model. Other measurement models, no. So far as point B is concerned, we will be discussing after some time. Other measurement models are like if a lessee applies the fair value model in International Accounting Standard 40 investment property to its investment property, the lessee shall also apply the fair value model to right of use assets that meet the definition of the investment property in International Accounting Standard 40. Then is the subsequent measurement of the lease liability. So if we just close what we discussed about the subsequent measurement of the right of the use asset, this means after initial measurement, simply this is an asset, you will be applying International Accounting Standard 16 or either cost model or revaluation model. But if that right of use is an investment property, then if you are measuring that investment property under International Accounting Standard 40, then that right of use asset will be treated accordingly. Lease liability subsequently measured like increasing the carrying amount to reflect the interest on the lease liability, reducing the carrying amount to reflect the lease payments made, remeasuring the carrying amount to reflect any measurement or lease modification, or to reflect revised in substance fixed payments. Very simple, as we can discuss with the help of an example. This is the same one as we have seen in International Accounting Standard 17. Let's look at this concept with the help of an illustration, and that illustration is illustration number 13. It should open. Okay. I'm sure you remember the outcome of illustration number 12. This was the initial measurement. What will happen subsequently? See, if I use pen over here, I don't want this. Okay. So this is our asset, and its life is 10 years. Its life is 10 years. We will see, is there any residual value here? There is no residual value. Simply divided by 10, this will become the depreciation for each year. Okay, let's see how it works. See, right of use asset, what you did? Depreciation for each year. Depreciation for each year. Depreciation for each year. Likewise in 2016, 17, 18, 19, like any other asset. This is simple, this is your asset, and you will be depreciating it in accordance with the International Accounting Standard 16. This is your asset. As you can see that we have depreciated it over a period of 10 years, and at the end of the 10th year, you can see that the value is nil, because the carrying value at the start of the year 10 is equal to approximately to its depreciation. This is something normal, as we all know. Now let's have a look at the lease liability. See, this lease liability, actually I use this pen very infrequently, so that's why it is not responding me in a friendly manner. It is not responding me friendly. Response is okay. I think here. Okay. Okay. So this is the lease liability. So what will happen, as we have seen in our slide, and as we know under International Accounting Standard 17 as well. 17 as well. So this is the initial liability. This is the initial liability, and at the end of first year, we will calculate the finance charge at the rate of 5%. We will calculate the finance charge at the rate of 5%, and this will be credited to the profit and loss account. As we can see from illustration number 13 solution. See, in case of lease liability, we have prepared the same solution, schedule. You can see that here that this is the finance cost. This is the finance cost, and this is calculated by applying 5% on this figure. So this will add to our liability. So this will become the opening balance for 2017, and because lease payment is advanced, so this much we have paid at the start of 2017, and at the start of 2017 this was our lease liability, and again we calculated the finance charge because this amount was outstanding for the whole year, so we applied 5% on this amount. This gives us like this 161,580. This is the same schedule as we all understand under International Accounting Standard 17. So I just want you to note here, like at the end of 10th year, this lease liability has become 0. This lease liability has become 0. So this is the subsequent measurement with the help of the illustration. This was a subsequent measurement. Now, before moving to the reassessment of lease liability, I would request Mr. Khayyam to run the first poll, and you will be having like 2 minutes because this is a small case study to answer that question, but the answer will be either in yes or no. Answer will not be longer one. You just need to opt for yes or no. Poll starts now. Okay. मैं आंसर कर सकता हूँ? पूरा आंसर कर दूँ? सर मैंने वेबिनार में पोल क्वेश्चन रेज किया See, what are the results of our poll question?
So 80% of the participants have said yes, and which means the contract of 10 rail cars does contain a lease, and 20% have said no.
80% are correct. It's not a matter of majority, but technically they are correct. The contract for 10 rail cars constitute, in fact, is a lease contract. So they are correct. Those who could not answer correctly, I just very quickly just want to remind them yesterday discussion, like there are 3 things which must be there. Number 1, identified asset. Number 2, customer can benefit substantially from the use of that asset. And number three was customer can decide how and for what purpose the asset will be used. So here 10 cars clearly identified. Why clearly identified? Because supplier cannot substitute them except for repair or maintenance. So this means these 10 rail cars are clearly identified, because supplier substitution right is restricted to the extent of the maintenance or repair and maintenance. So first criteria is met. Second is, of course, customer will be using these cars to get benefit from these 10 rail cars. So because these rail cars will only be used by the customer, and all these rail cars will be available on the premises of the customer all the time if these are being used or not. So customer can use for other purposes as well, for example for storage. So second condition is also being met. Third one is how and for what purpose these rail cars will be used. Of course, this will also be decided by the customer. As we can see that when these are not being used, they can use it for another purpose, and these are available on the, and what material and where, when that will be transported. This is the decision of the customer. So poll 1 answer, 80% people are correct. Okay. Do we have any question? Okay, there are questions, please.
The questions were relating to the illustration number 12.
Illustration number 12. Yes,
yes,
please.
One of the person named as Abdul Rahman Majid asked that the lessee will always recognize the right of use asset in all long-term leases, and does lessor will always keep the assets in statement of financial position?
Yes, he will always recognize right of use asset. There is one exception. We will be discussing it, but for small value items, and for those items whose life is not more than 12 months. Next.
Mr. Zaman Sultan asked that whether we use reducing balance method or not in order to depreciate the right of use.
You can, because see, right of use is basically is like any other asset. So for any asset, you can decide yourself how the benefits are being consumed. Like it depends on the pattern or the way the benefits are being consumed. So that will determine the depreciation methodology.
Mr. Burhanuddin asked that is the concept of risk and rewards abolished in IFRS 16 in perspective of lessee?
No, it is not abolished. It is not finished. It is yet there, but it is there. What happened in fact? International Accounting Standard 17 was not reflecting the economic reality. How? See, approximately more than the leases amounted to approximately more than $3 trillion in the world, and only a small amount of $3 trillion show up on the balance sheet. So this is just because because people were applying International Accounting Standard 17, and they were treating a lot of leases using operating lease criteria. But now all leases will be on the balance sheet. So this will really reflect the economic reality. Now all $3 trillion or more will be in the balance sheet. So this will really reflect the true picture of the economic position of a company, which was not the case in case of International Accounting Standard 17. Risk and reward concept is there. Rather, it is further improved.
Mr. Ritsa Ahmed asked that will the nomenclature for leased assets in balance sheet for presentation remain leased?
No, it will be right of use asset. It will be right of use asset. Next.
Okay. Mohammed Majid asked, will revaluation of asset as per fair value model IAS 40 results in any changes in lease liability recognition?
No. We are about to discuss when your lease liability will be affected. Except those situations, your any change in your lease asset will not affect your lease liability.
Shehzad Forum asked, meaning if the lessor provide any incentive during the lease period to lessee, what will be like?
Yes, if at the date of inception there are incentives, so that will be incorporated in it. Next.
Abdul Rahman Majid asked, will lessee do any impairment assessment of the right to use asset?
Yes, like any other asset.
How to treat subsequent rental charges or subsequent change in rights and economic benefits?
The same way as you do for the other assets. But we will be when we will be discussing reassessment, your question may be answered.
Fatih Fakhri asked, in case of change from cost model to fair value model, what will be the effect?
Fair value model.
He's asking for the change effect as a result of change from cost model to fair value model.
As per International Accounting Standard 16. Next. Okay.
No more questions.
Okay. See, reassessment of lease liability. So what happened? Sometime you reassess your liability, lease liability. When you do that, you will be doing that reassessment when there is a change in the lease term. When there is a change in the lease term. For example, initially you made calculation for 10 years, but at the end of 8th year, you decided to exercise your option to extend your lease term. Like if we, I just refer to example number 12. See, in example number 12, we can see that in example number 12, because this is our reference for like just 1 minute. In example number 12, you can see that the lease was for 10 years, initially for 10 years. The lease was initially for 10 years with an option to extend for 5 years. But as we have seen in the answer to illustration number 12, we calculated the lease liability using 10-year periods. Why? Because it is mentioned in the question. It is mentioned in the question that it is not reasonably certain to exercise the option to extend the lease. It is reasonably certain. So that's why what we did, we used 10 years to calculate the lease liability. So now what happened? Subsequently, after a few years, if you decide, you change your mind and you decide, okay, we shall be extending, we shall be exercising our option once 10-year period is over, and we shall be extending this lease for another 5 years, and this option is already there. So here whenever you decide, you will be re-measuring your lease liability. You will be re-measuring your lease liability. So this is, this point relates to this. If there is a change in lease, let me check. I think point that should be here. Yes, it is there. When there is a change in lease term, so what you will do, you will remeasure. You will remeasure your lease liability. This is one. Second, reassessment of purchase option. Assessment of a purchase option. For example, previously you see, or at the date of inception, you see that it is not reasonably certain that you will be exercising the purchase option. That's why you have not incorporated that purchase option in the lease liability. But subsequently, you see, oh no, we can exercise this purchase option. In that case, standard allows you to remeasure your lease liability. These are specific situations which we must memorize them. That we must have list in our mind, like when the lease liability, when will we reassess lease liability. Then amounts expected to be payable under the residual value guarantees. So the amounts, there is a change in the in these amounts, or there is a change in the future lease payments due to change in index or rate used to determine those payments. So now, one, if there is a change in lease term. Second, if there is a change in the assessment of purchase option. Number three, if the amount expected to be payable under residual value guarantees, there is a change. And the number four, because some of your lease payments were based on index or rate, and there is a change in the index or rate resulting in the change in the lease payments. So in these four situations, you will be remeasuring your lease liability. But what will be the discount rate? As we have seen in illustration number 12, discount rate at the date of inception was 5%. But you will be using the revised discount rate. You will be in both situations, you will be, in this situation, you will be using the revised discount rate, and in these two situations, you will be using the unchanged discount rate. Like in case of illustration number 12, it was 5%. If there is any reassessment after a couple of years, so you will be using the whatever rate is prevailing at that time. Okay, let's understand with the help of an example. You will be having illustration 14 available with you. Okay, let's go to the illustration number 14. Illustration number 14. This is the illustration number 14. See, here we can increase its size. On 31st December 2021, lessee concludes that it is now reasonably certain to exercise the option to extend its original lease. Lessee incremental borrowing rate at the end of 2021 is 6% per annum. Lessee expects to consume the right of use assets, future economic benefits, evenly over the lease term, and thus depreciates the right of use asset on a straight line basis. See, one of our respected members questioned about that. Do we need to use only the straight line method? Here you can see that from this illustration, you can see that this is not the case. You can use whatever method is appropriate. Here you can see that. Lessee expects to consume the right of the use assets, future economic benefits evenly over the lease term, and thus depreciate the right of use asset on a straight line basis. Similarly, if you expect that the benefits embodied in the right of use asset will be consumed like more in the initial period, and subsequently the benefit will reduce, so you can go for the reducible method. Okay, now come to our discussion. So see, here what is the situation? Here is a change in lease term. Change in lease term. I think, though I'm writing, my writing is not that bad, but because but it is not showing you the right way. Anyway, this is a situation where there is a change in lease term. So here we will reassess the lease liability. Initially, the lease term was 10 years. Now, because we decided to extend it up to 15 years, so we will be reassessing this lease liability at this point in time. Reassessing this lease liability. At what rate? Rate will be now this 6%, as we have seen in the slide. If we just go back to the slide, this is the situation where we can see that here we need to go further back. Here. So this is lease term, change in lease term. And what we will do, we will be reassessing it using the revised exchange rate. We will be reassessing it using the revised exchange rate. So here in this case, the revised exchange rate is 6%. Here it is 6%. So when it happened on 31st December 2021. So what we will do, we will reassess our lease liability. We will reassess our lease liability on this date using this 6% discount rate. If we just go back to previous illustration to see what is the value at this date. So I suppose this is the, if you can see, this is the lease liability schedule. When we decided 31st December 20x1, so this is the amount for 31st December 20x1. This is the lease liability. On 31st December 2021, and we decided that okay, we will not end this lease, we will continue for another 5 years. This means you want to extend this lease up to 2030. So what you will do, you will see from this point into the future what are the payments you will have to make. These are the payments, this, and 550,000 for next 5 years. So these are the cash payments, fixed payments from 31st December 2021 onward. So what you will do, by using this fixed payment, you will be recalculating the lease liability. Please note, if you have a notebook with you, please note like before reassessment, our lease liability was 1861625. Now we are going to reassess it. See what we did, we recalculated it. How? See, as I showed you, like these are the 4 payments after this date. After 2021, this is 2022, this is 2023, this is 2024, this is 2025, and as we see, as we saw in the illustration number 12, this is the payment, fixed payment for per year in the extended period. So this will give us a new lease liability. This is the new lease liability. So what was the lease liability before assessment? Before assessment, this was 1861625. Now, what was the amount? 1861625. This was the lease liability before reassessment. After reassessment, now this is the lease liability. So what about the difference? What we will do, you can read over here as well. I wrote it for you, and I will be sending it to you people as well. Of course, I'll be giving it to our ACCA people. They will be sending it to you. See, lessee increases the lease liability by 1920109. What is this amount? This is the difference between these two amounts. If you just calculate it, 3781 minus 18, so this will give you 1920, which represents the difference between the re-immediate liability of 3781734 and its previous carrying amount of 1861625. The corresponding adjustment is made to the right of the use asset to reflect the cost of the additional right of use recognized as follows. Please note here, this is very important point. What happened to the right of use asset will not affect your lease liability. But if there is any reassessment of your lease liability and there is a change in that lease liability, that will affect and that can affect your right of use asset. So what will be the entry for this? The entry will be your right of use asset will become debit and your lease liability will become credit. From 2021 onward, your lease liability will be 3781734, and whatever amount is lying at 31st December 2021 of the right of use asset will be increased by 1920109. Okay, so here we can see that subsequently the lease liability, see, this is the lease liability at the start of, as we have just seen, 2022, and then this the calculation of the schedule and the shape of the schedule will be like this. Okay, now similarly right of use asset will be increased. Before moving to another concept of lease modification, I would request our colleagues to pop up second poll question. Rather, we will be popping up 2 poll questions, one after another.
If they have any questions, they can type them in.
Yes, by the time if you have any question, no, I think they should focus on that, because poll questions are not like a one-time question. They have a scenario, small scenario. So it is better they should focus on that, because with the help of poll question, I am trying to cover a very important learning objective, which we discussed yesterday. So please pop up poll question 2.
The question 2 relates to the airport concession space contract.
Yes. Please answer this poll question. In either case, you will get benefit, because even if your answer is wrong, at least during our discussion, you will be able to learn something why your answer was wrong. You can improve yourself. So everybody should participate. Please wake up and answer this poll question. Even I can extend this question for 1 minute, but answer this question, because so I should keep quiet so that you could focus. How many people answered?
47%.
Okay. Please answer this poll question. Approximately 50% people answered it. So rest of the 50%, please look at your screen and try to answer this question. Okay, what are the results?
50, 52%, 48%.
What they said? Yes or no?
52% said yes, and 48% said no.
Again, though majority is right, but of course purely on practical ground. But 48% people said no. And the people who did not respond means they were lacking in this concept to greater extent. But anyway, I'll try to explain it. It may be helpful for you people. For example, what is basically the concept when I said 52% are right? Who said no, they are correct? This is not a lease. See, if I just in a very practical way, like substitution right. If company or customer, okay, I think I should use word and I should type on that word. The concept is very simple. Okay, here. See three criteria. Number one, I'm not exactly using the standard word. I'm trying to give you a tip practically. It may be helpful for you. Does the supplier of the equipment, does the supplier has substantive substitution right? If answer is yes, yes is equal to asset is not identified. And if answer to this question is no, asset is identified. Now the next question is how we will see, how we will evaluate about the substantive substitution right. See here again, try to answer these questions. Will the supplier get benefit from substitution and cost of substitution is minimal and it is probable that substitution will take place. See, if all three conditions are there, if all these three conditions are there, this means supplier has substantive substitution right. This is derived, of course, from the standard. This is derived from many examples given by the standard in its implementation guidance, and of course, some of the material from basis of conclusion. Simply, you need to focus only on one thing, because when we start with identified asset, so this sometime is not very helpful, because this depends on the substitution right. Simply go for the substitution right. Does the supplier has substitution right? If answer is yes, this means asset is not identified. If answer is no, this means asset is identified. This way you need to check whether the asset is identified or not. Next point is, how can I see whether the supplier has substantive substitution right? Just answer three questions. Will the supplier get benefit from substitution? What is the cost for, is the cost minimal? Is it probable? If answer to all these questions is yes, not only one, all these questions is yes, then supplier has the substantive substitution right, which means asset is not identified. Now come to our example, poll question 2. Here you can see that this agreement was for the space of the kiosk. See, the practical ability to change supplier has the practical ability to change the space used by the customer. There are many areas in the airport that meet the specification for the space in the contract, and the supplier has the right to change the location of the space. No, to other space that meets the specification at any time without customer's approval. This means supplier will not have to incur any cost if he decides to change the space. So this means B question is answered. Then supplier benefits from substituting the space in the airport because substitution allows supplier to make most effective use of the space at boarding areas in the airport to make changing circumstances. So the answer to A is also yes. And though nothing is mentioned about C, if answer to A and B is yes, then obviously he will be doing it because on airport, if someone pays you good money for a very premium space, you will be simply moving this kiosk because you do not have any cost, and you have specifically mentioned in the contract as well. Even if it is not specifically mentioned, you need not the approval of the customer and other things. You can see from the case scenario. So this on the basis of this, asset is not identified. So because all criteria must be met, so asset is not identified. So this agreement is not a lease agreement. Let me rephrase this question so that if you want to use it for your practical purpose, so you can use it. Is the substitution cost minimal, and is it probable? Is it probable that substitution will take place? So you can ask yourself these three questions. Now, before moving to next poll question, if any of our respected member has any question, please feel free to ask them.
Abdul Rahman Majid asks that is there any contingent rent concept in IFRS 16 like it was in IAS 17?
Yes, we have seen the definition. As you can see from the slide, if you just go back to the slide, I suppose you missed that slide. Initial measurement of your here you can see that variable lease payments that depend on an index or a rate. So initially measured using the index or rate at a commencement rate. So it has amounts expected to be paid by the lessee and the residual price payment of penalties for terminating the lease, or here is a contingent element in case of variable lease payments. Next.
Burhanuddin asked that in the IAS 17, the repair and maintenance remains with the lessee in shape of risk and benefits transferred to lessee. However, in IFRS 16, it remains with lessor. What does it mean?
No. It is not with lessor. Here, the concept is while deciding whether the supplier has substantive substitution right, it may be there in the contract that lessor will be substituting it for repair and maintenance. So don't take it as if don't take it as if the lessor has substantive substitution right. This is the concept. Repair and maintenance can be with either party. That is not an issue. It is not. It does not depend, or it is not something like 17 was saying and 16 is not saying.
Zishan Shafi asked that if the lessor gave the discount off the record on lease of any asset, for example, market value was of an asset rupees 100 and bank approves the lease amount for same amount, but the lessor gives discount of 20 and return it in cash, then what will be the value of asset to that could be accounted for in the books?
Can you repeat this question?
He is saying that if lessor is giving you a discount off the record, and banks allow the amount on the recognized value of the asset, and what will be the effect?
This means you are in fact taking from the bank like 100 rupees, and simply make it simple. You bought asset for 80 rupees, in fact.
Yes.
So you will be recognizing lease liability to the extent of 80. Rest is your simple financial liability under IFRS 9.
Okay.
Because you received the money and you utilized only a part of that money, so that will become the part of the contract which fulfills the lease criteria. Rest of the amount does not fulfill the lease definition.
Muhammad Azhar Siddiqui asked, on the reassessment, the right of use asset will increase. This means the subsequent depreciation will also increase.
He's right. The subsequent depreciation will increase. Yes, he's right.
He's asking for the treatment as well.
Treatment of what?
Treatment for increase effect.
See,
on the basis of reassessment.
See, what happened? Like if we, it was increased in illustration number like in 13. What was the case? When it happened? It happened in like this reassessment took place on 31st December 2021 on this date. This one. On this date. Okay, on this date. So opening balance of 2022, the right of use asset will increase. So what will happen? You will be charging a higher amount of depreciation on this right of use asset. Previously, you were depreciating it at a lower rate, at a lower amount. Now, because this amount is increased at the start of 2022, when 2022 will end, you will be depreciating this increased amount of right of use asset over the remaining life of the asset. I hope it should be clear.
So, Sayyid Waqas Hassan asked the question that if we entered into an operating lease on 1st January 2015 for 5 years, that will going to be end at 31st of December 2019. So what will be the effect if I am preparing my balance sheet for the year 2019 when the standard is applicable for the last 1 year? And will I have to record lease liability and right of use asset, or can I ignore it if the amount is not material? If we do not show it, will we have to disclose it as well?
See, there are 2-3 questions. Number one question is, like if you have an operating lease and now you are at 31st December 2019, mean the first year when you are required to apply this new standard. You will have to, standard has given few options. You will have to apply international account IFRS 16 retrospectively, mean your opening balances will be affected. But there is another option. What you can do that you can calculate the effect of this new standard and adjust your opening retained earnings. Any case, you will have to calculate this operating lease as if it was in fact a lease under IFRS 16. We shall be discussing this point again towards I suppose towards the end of this session.
Hamza Tufel asked, does lease also affect the income tax of company owner?
See, Hamza, lease, the treatment of lease is given by the IFRS 16, and so far as the taxation is concerned, that is based on the tax law. In most of the countries, what happened? They simply allow you whatever you pay under lease as an expense. They do not allow you to bifurcate it between finance charge and the capital repayment. So this may not affect your income tax payments. Yes, of course, this will affect your deferred tax liability or asset.
Mohammed Hanif asked, even if substitution cost is high but borne by the supplier, I think lesser, then how it impact the assessment?
Again, please.
If substitution cost is high but borne by the supplier, I think lesser, how it will impact the assessment?
Yes, see, I mentioned that answer to all these questions must be yes. When you say it is high, so the answer is no. Is the substitution cost minimal? The answer is no. So this means supplier does not have substantive substitution right. What was his name?
His name was Mohammed Hanif.
Mohammed Hanif, are you clear on this? See, answer to all these three questions, at least A and B must be yes. Normally, information about C is not provided. But if it is there, fine. But if it is not provided, ignore it. But answer to A and B must be yes. Only then you can take it like a supplier has the substantive substitution right. I can mention over here as well. If answer to A, B, and C above is yes, this means supplier has substantive substitution right. You can note it. This will, inshallah, will help you in applying this concept practically. If answer to any of the A, B, and or and C above is no, this means supplier does not have substantive substitution right. This means asset is not identified. This means asset is identified. I hope this concept should be clear. If answer to any of the A, B, or C and C above is no, supplier does not have substantive substitution right, asset is identified. this principle will apply in most of the situation. Okay, next question.
Mohammed Asad asked, on the reassessment, the right of use asset will increase. This means the subsequent depreciation will also increase.
Yes, yes, that's right.
Kindly tell us how to treat that as well.
Okay. Asad, see, let's, I have here answers to the illustrations so that we can see that what will happen to the increased depreciation. See, here you can see that this is illustration number 13. See, what happened subsequently. Mr. Asad, can you see that this is the right of the use asset, and this is its depreciation, and this is the carrying value at the end of 2016. Now, till 2021, this 420,391 was the depreciation per year. Now, what happened after reassessment? I hope that it should be included in the answer to 14. I suppose, no, it is not there. See, your asset is increased. Here it is given. See, the right of the use asset and the lease liability from 2022 to the year 2030 are as follows. Right of use asset will be depreciated over the remaining period of 9 years. Depreciation per year will be 400,186 per year. This will be the calculation. Ajay, I hope it should be clear. But anyway, because this is being recorded, you can revisit, because revised calculation of depreciation is there. It is 400,186 per year. Next.
Okay. Shazad Firm asked factors to consider for what factors to be considered for remeasurement?
Remeasurement, as we discussed, so it is better being professional. You must memorize them. See, these are there. This slide will tell you these are the reason for your reassessment of liabilities. 4. See, if there is change in lease term, as we have seen in the example, and you have reassessed the purchase option. Previously, you thought you will be exercising this option, but now you see it is not beneficial, and so you will not be exercising this purchase option. Number 2, this is number 2. Number 3 is if there is change in the amounts expected to be paid under residual value guarantees, and number 4 is change in the future lease payments resulting from a change in index or the rate. You in any of these 4 situations, you will be reassessing your lease liability. But remember, in case of change in lease term and the assessment of a purchase option, you will be using the revised discount rate, which will be available normally. And in case in second case, in third and fourth case, you will be using the unchanged discount rate, mean the same discount rate which we used at the time of inception. Okay. Now, please hold this question and pop up the next poll question. Okay. Now we are popping up another poll question. So I expect that everyone should participate. Only 3 things need to be checked. Number 1, identified asset, and we have discussed at length so far as identification of asset is concerned. Then is this will substantially benefit, that asset will substantially benefit to your company. So this problem, this condition is normally fulfilled. In very rare situation, this is not fulfilled. And the third one, how can the customer decide how and for what purpose the asset will be used? These are 3 things you need to assess from this poll question. Please pop up that question. I'll keep quiet, but this does not mean I'm not interested in encouraging you to answer as many as people, so that I could get the good idea about the success of our session and the success of our communication. Please. which one is pole 3? This pole 3?
It relates to the ship contract that contains a lease.
It relates to the
Ship contract
ship contract.
in the previous session.
I suppose this is pole 3.
Yeah.
I suppose you popped up pole 4. No problem.
Until now, 30% people have voted, and I think.
No, don't share answer now, because this will affect other people thinking. They can go either direction instead of having their own point of view.
Having said that, I mean that you should encourage more people.
No, well, people are thinking, because this is a small case study, so it is better we should keep quiet for a couple of minutes so that they can answer. Yeah. Well. Please answer this poll question. Few minutes are left. Few seconds are left, rather.
2 seconds. 44%.
Okay.
So, question was, does the ship contract contain a lease? The answers, 73% said yes, 27% no.
Please repeat again.
73% said yes, 27% no.
Now, this time, I suppose this scenario was related to the ship.
Yeah.
Like a customer enters into a contract with a ship owner to transport the for the transportation of cargo from Rotterdam to Sydney on a specified ship. The ship is explicitly specified in the contract. Was this the question? Yes. 73% said yes.
27 no.
27 no. This time minority is correct. This time minority is correct. See, this is very important. See, the first criteria is there an identified asset? The ship is explicitly specified in the contract, and supplier does not have the right to substitute the specified ship. You can see from from the example, the ship is explicitly specified in the contract, and supplier does not have the substitution right. When your question or when your situation specifically says that the supplier does not have a substitution right, this means the ship is identified. So first criteria is being met. Now come to the other areas. Of course, the customer will benefit. Customer has the right to obtain substantially all of the economic benefit from the use of the ship over the period of the use. Its cargo will occupy substantially all of the capacity of the ship, thereby preventing other parties from obtaining economic benefits from the use of the ship. These two conditions are there. These two conditions are there. Now let's see the third one. How and for what purpose? This means if we just look at it, what happened in fact in this situation? Three conditions. Number one, identified asset. Yes, yes, there is an identified asset. Number two has got in fact two sub-point about the control. Both must meet, and A is benefit. So the customer can substantially benefit from the use of this ship. So this is also being met. Now, so far as how and for what purpose, how and for what purpose the ship will be used, this is not being met. So that's why this contract is not a lease contract. See, customer does not have the right to control the use of the ship because it does not have the right to direct its use. How and for what purpose the ship will be used, that is the transportation of the specified cargo from Rotterdam to Sydney within a specified time frame, is predetermined in the contract. Customer has no right to change how and for what purpose the ship is used during the period of use. Customer has no other decision-making rights about the use of the ship during the period of the use. For example, it does not have the right to operate the ship and did not design the ship. Customer has the same rights regarding the use of the ship as if it were one of many customers transporting cargo on the ship. See, the simple point here is this was predetermined. This was predetermined. How and for what purpose the ship will be used. Customer cannot determine how and for what purpose the ship will be used. So this criteria is not being met. So that's why this agreement is not a lease agreement. Having said that, I would like to mention a very important point related to this about like how and for what purpose. Sometimes you can face conflicting situations. Like where I was writing, I suppose on here. See, how and for what purpose. This means what we learned. If how and for what purpose the asset will be used is predetermined, then see who determined this. Customer or supplier. If supplier, this means third, the criteria is not being met. If customer, the criteria is being met. In this situation, this was the case. In this situation, this was the case. It was predetermined how and for what purpose the ship will be used, and that was determined by the supplier. Even if nothing is mentioned, you can safely assume that this was determined by the supplier. So this criteria is not being met. But if categorically it is mentioned over there that how and for what purpose the asset will be used, customer himself, herself, or itself predetermined it, then this criteria will be met. So this is a minute difference which you can face in your practical situation. Because at that point in time, you will feel that we learned during our practical sessions that if it is predetermined, then this criteria is not being met. But make sure who predetermined it. If it was the customer who predetermined it, then this criteria is being met. But if it is supplier who predetermined it, then this criteria is not being met. Do we have any question?
Yes, lots of questions now. Hifza Ahmed asked, in case of reassessment of lease liability, what is the reason for using a revised discount rate in case A and B, and using an unchanged discount rate in case of C and D? That example that I think A, B, C, D that you have illustrated to the attendees.
Ask her to send this question, because I'll be answering it separately. Okay, next.
Okay, Abdul Rahman Majid asked, because of contingent rent element, will we reassess the lease liability and right of use asset, or just book the contingent element of as an asset?
No, we will reassess. Next.
Okay. Sanaullah asks, sir, can you help me with the allocation of finance charges using the two methods, that is actuarial method and sum of digits method?
Sanaullah, I can help you definitely, but we have a lot of things to be discussed already, predetermined. I would say predetermined. So I'm really sorry, we cannot take up this thing during this session.
Sanaullah again asks, actuarial method is simple. Finance cost is calculated using outstanding amounts.
No, this is in these illustrations, actuarial method is used. Next.
Sanaullah again said, I want to understand the sum of digit method for allocating finance costs.
Sanaullah, I do not promise, but I will see if I could accommodate your sum of digit method in the coming session. But I cannot promise.
Hanan Bashir asks, sir, if we have a VAT 5% on lease payments, what will be the treatment and how we will treat this one in general?
See, VAT or sale tax, if your sale tax is non-refundable, that will become the part of the right of the use asset. And so far as the lease liability is concerned, this will not become the part of the lease liability, because this is a liability towards the government. This is not a liability because of the use of the asset. So this will not become part of your lease liability.
Mohammad Hanif said, it's really subjective, and for sure lesser will evaluate cost benefit in case of doing substitution, and only if economic benefits are more, then they will go for it.
Repeat this question.
He said it's really subjective, and for sure lesser will be evaluating its cost benefit in case of doing substitution.
You're right. That's why I do not put much stress on the point C. Like, is it probable that substitution will take place?
Mohammed Majid asked, what happens if the interest rate is constantly changing, as in unstable economies? Which implicit rate will be used in that case?
Who is this gentleman?
Mohammed Majid.
Mohammed Majid, specify your situation. In case of reassessment and first two situation, of course, revised rate, which is prevailing at the date of reassessment. But in the third and fourth case, of course, the same rate will be used which you used at the date of inception.
Umar Farooq asked, if the initial lease is for 10 years with a right to extend 5 years, but initially it was decided that the lease will not be extended, then what will be the scenario?
Yes, you will calculate your lease liability and right of use asset based on 10 years, not 15 years.
Again, Umar Farooq asked, after 7 years, 3 years to left, after 7 years, management now decides to extend the lease for 5 years. Will it be a change of accounting estimate or policy? Please also provide the accounting treatment for depreciation.
Who is this gentleman?
Again, Umar Farooq.
Umar Farooq, I think you have joined somewhere in between. Actually, I have given two very comprehensive example in which the lease was initially agreed for 10 years, and then at the end of, I suppose, at the end of 6th year, they decided to extend this lease for another 5 years. And I have shown the figures. So, Umar Farooq, please, if you go through the recording, you will find a very detailed answer to your question. Thank you.
Mohammed Azid said that as far as this session is concerned, I am supposing that I will be deducting the depreciation every year after I add up the finance cost. Am I right?
Ashit, sorry, repeat this question.
He said I am supposing to deduct the depreciation every year after I add up the finance cost.
No. Ashit, see. Ashit is, see, after initial recognition, right of use, right of use is an asset. So you will be depreciating this asset. It has nothing to do with your finance charge. So far as the finance charge is concerned, this has got linked with your lease liability. Your finance charge has nothing to do with your asset. Asjad, I suppose it should clear.
There is example 6B as well for ship as well. Most of the people might be giving answer using example 6B. So please ask some particular poll questions.
No, you mentioned 2 questions in that.
One is about the ship and other one is about the I think rail contract.
The other
They were confused
no. If
about
people answered this, correct it. If people answered example 6B and they answered yes, that this is a lease, they are correct. I was discussing 6A in fact. Next.
okay. What will be the accounting treatment for leasehold improvement by tenant on premises of 2-year lease agreement while renewal of lease agreement is not enforced upon expiry?
Sorry, repeat this question.
What will be the accounting treatment for leasehold improvement expenses by tenant, paid by the tenant on premises of 2-year lease agreement while renewal of lease agreement is not enforced upon expiry?
Please send this detailed situation through email because this information is not enough. We can have a 5 minutes, a few minutes break rather than, I should say, few minutes break for Asr prayer. So here in Pakistan, we are running short of time for Asr prayer. So let's have a break for a few minutes. Please mute. ਤੁਸੀਂ ਪੁੱਛ ਰਿਹਾ ਜਾਂ ਮਤਲਬ ਮੁੰਡਾ ਘਬਰਾ ਰਿਹਾ
नहीं मैं क्या हुआ
Okay, ji. We are receiving a lot of questions. See, I tried with the help of poll question, as I mentioned earlier, to give you the good idea of the learning objective one, which we covered. Sorry, are we reaching to the
Yes.
audience?
Click.
Okay, so so I tried to give you a good idea. So when you will go through the recording of today webinar, I do not say that if you go through the recording of the yesterday webinar, but I'm not very sure about the quality of the recording of the yesterday webinar. But I'm very sure that if you go through the recording of the today webinar, you will get a good revision of the concept which we discussed yesterday. Number one. Number two, I'll be sending you all the examples or illustration which we discussed along with their along with their solutions, so that you could cement your concept with the help of those solutions. So that's why I'm not taking questions right now. I am moving to the next part of our lecture, and if we have some time towards the end of the lecture, definitely we will be answering as many questions as possible at that point in time. Thank you. Okay, now come to the lease modification. Lease modification. Lease modification is basically if there is a modification in the lease, you will treat it as a separate lease if these two conditions are there. Increase the scope of the lease by adding the right to use one or more underlying assets. Number one, and consideration for the lease increases by an amount commensurate with the standalone price for the increase in scope and any appropriate adjustment to that standalone price to reflect the circumstances of the particular contract. Mean, if two conditions are there, number one, scope of the lease is increased because there is the addition of one or more right of use assets, and this could have been treated as a standalone lease. So if these two conditions are there, then this will be a lease modification. That modification will be treated as a separate lease. So let's understand with the help of an example. The example for this is, we can lease modification example is lease modification example is we have examples here. Example. Yes. See, lessee enters into a 10-year lease for 2,000 square meter of office. At the beginning of year 6, lessee and lessor agreed to amend the original lease for the remaining 5 years to include an additional 3,000 square meters of office space in the same building. The additional space is made available for use by lessee at the end of the second quarter of year 6. The increase in total consideration for the lease is commensurate with the current market rate for the new 3,000 square meters of office space, adjusted for the discount that lessee receives, reflecting that lessor does not incur costs that it would otherwise have incurred if leasing the same space to a new tenant, for example, marketing cost. So this modification of 3,000 will be treated as a separate lease because both criteria is being met. Now let's come to the recognition exemption. Recognition exemption, that even if a contract meets the criteria for treating it as a lease, even then you can apply other standard instead of IFRS 16, and that is the case in where the asset has a life up to 12 months, number one, and or its value is small. Leases where underlying asset has a low value when new, such as personal computers or small items of office furniture, this election can be made on a lease by lease basis. So this is the recognition exemption. Then is the lesser. Lesser, as I mentioned, lesser treatment is more or less same. In case of lesser, leases will continue to classify, lesser will continue to classify the lease as either finance or operating lease. Sale and leaseback transaction. Before moving to this, I just want to share with you an important concept with the help of some write-up. If you people can note some of the information. I'm sure you can very clearly see this screen. Very clearly, you can see this screen. If I write something on this screen, you can see it very clearly. Please answer with yes or no. Can you see it very clearly? If I write something on this screen, okay. See, the situation is I want from your side a very simple double entry, like disposal of an asset with a carrying value of, like say we should use dollar, no, what's that rate, pound, dollar, say 500,000. The sale proceeds is dollar, say 535,000. What will be the journal entry for this? What will be the journal entry for this? You can mention this in your comment. Mention the journal entry for this. Like you sold an asset for 535,000, and the carrying value of that asset was 500,000. If we want to record in one single entry, and what will be the double entry for this situation? It's very simple. We know from our basic accounting. I suppose you might be receiving the comment about this double entry. What they are saying? What debit, what credit?
People said credit asset 500,000 and credit gain on disposal 35,000.
Okay.
Danish Hassan Ghazi. And Zona Rehman said credit asset 5 lakh. Mohammed Nan said debit cash 5,35,000. And Abdul Afid cash.
No, why don't you people tell me the compound entry instead of just telling what to do with just one figure. I'm very sure you people will reach to this entry like debit, say cash received, cash 535. I'm not using currency sign. It's understood. Debit, no other debit. No, there will be credit. Credit asset account can be disposal 500,000, and then credit profit and loss account with 35,000. Is it right? Please comment either yes or no. Is it right? I suppose it should be right.
Yes.
Okay. Yes. Okay. So everybody should say yes, I suppose.
Yes.
Because this is basic account.
Lots
This
of
basic.
people say
Okay.
yes.
Okay. So let's take an example of part exchange. Like if I add over here, like sale proceed was in cash, and another asset worth of say dollar, another asset worth of 20,000. Then what will be the entry for this? Mean you sold an asset whose carrying value is 500,000, and in return you received two things, cash and plus asset, and that asset has 20,000 worth in the market, fair value of that particular asset. So the entry will be debit asset. Just in order to differentiate these two accounts, new asset, and then with the 20,000, and I'll be renaming it old asset, and profit and loss will become 55,000. Do you think it is correct? Please answer yes or no.
Lots of people again saying yes.
Yes. It's basic accounting. Because you received cash, you received new asset. In return for that, what you did, what you give up. You gave up old asset, and as a result, you earned a profit of 55,000. Okay. Now let's make this situation a little more complex. I'm copying this illustration and putting it over here. See, you disposed of that particular asset, and what happened? Sale proceed was 535,000. But what happened? A part of this payment is received in cash, like $425,000 received in cash, whereas the remaining amount, how much is the remaining amount? I suppose it should be $110,000. $110,000 will be paid after, say, 5 months. So what will be your entry? The entry will be, like if I just copy this, just to be quick on this area. So the entry will be this. So I should bring this down. Okay, this is the illustration, and the entry will be like you have not received cash. You only received cash 400 and no. Here it is fine. Here it is fine. Here it is fine. Your agreement is, and the another asset worth of 20,000. This entry will remain the same. Another is that old asset and a payment of dollar, say 15,000 after 3 months. So the entry will be, this is the cash which you received, this is the new asset which you received against this old asset, and in addition to old asset, you will be paying like 15,000 after liability, 15,000 after 3 months. So this will make your profit something like, I suppose, 40,000. Please check that. Is it correct? Situation is in front of you. What is the situation? Like you are disposing of an asset and the agreement is that you will be receiving these two things, cash and a new asset. But against that, you will have to give up old asset and you will have to pay 15,000 after 3 months. What do you think? The entry, this will be the entry? Please, either answer yes or no. Take your time.
Some people are answering here and they are saying yes, including Abdul Latif, Sayyid Shamir Azhar, Shehzad Khurram, Atif Bhatt. I think we are looking after more participation from the attendees. Fatma Asghar Bhatti, yes. Kunal Rupani, yes. Sanaullah, yes. Danish Hassan Qazi, yes. Rizwan, yes. Murtaza, yes. Adnan Bashir, yes.
Okay, fine. Because this is basic accounting, so I'm happy a lot of people are saying yes, as I expect from you people. Okay, this is the basic entry. This is the whole story behind sale and leaseback. What happened in sale and leaseback? What you do, you give up an old asset. I'm talking about, like, in sale and leaseback, there could be two situations. I'm talking about one situation without using technical jargon. What happened? You are giving up an old asset and you are acquiring another asset in the shape of right of use of that asset. You are receiving cash as well, and you have to pay some money as well. And because you are giving up some asset, so there could be a profit or loss on that disposal. This is the sale and leaseback concept. Sale and leaseback concept of IFRS 16 is not something which is something new. It is basically derived from the basic concept. Like if I just correlated it, like this new asset will become your right of use asset. Right of use, I should use bracket, I think. Here. In case of sale and leaseback, this is your right of use asset. This is the actual cash which you receive. Actual cash which you receive. This is the actual cash which you receive, and how this will represent. This is exactly the carrying value of the asset given up. Carrying value of the asset given up. And this is your lease liability. This is the balancing figure. This could be debit or credit. Now it is on the credit side, but this could be on the debit side. This is your sale and leaseback. Now what happened? What is sale and leaseback, in fact? We will be coming back to this like journal entry. Okay, sale and leaseback. Now we shall be discussing sale and leaseback with the help of this small example, and then moving to the more complex example derived from the material given in the extra material of the standard. Sale and leaseback transaction. See, the important question is we need to determine whether the transfer of asset is sale of the asset or not. Because in sale and leaseback, what does it mean? You are selling, in fact, asset. You are transferring an asset to the lessor. Now the question is whether the transfer of asset is sale of the asset. If it is not a sale of asset, then treatment is very simple. Like you have an asset and you made an agreement with a lessor, like apparently it seems like you are transferring this asset to the lessor and then getting it back from the lessor. But when we apply the criteria given in the IFRS 15, which we will discuss in the coming sessions, you conclude that this is not a sale. If this is not a sale, if your asset is not sold, then this asset will not be derecognized from your balance sheet, from your statement of financial position. But what about the money which you receive? That money will become your liability. So let's discuss the easier part. That is, if your asset is not sold, if the transfer of an asset by the seller lessee does not satisfy the requirements of IFRS 15 to be accounted for as a sale of the asset, then this is simply a loan for you. The seller lessee shall continue to recognize the transfer letter and shall recognize a financial liability equal to the transfer proceeds. It shall account for the financial liability applying IFRS 9. For example, you have a building. Whatever worth it has, whatever carrying value it has, and you apparently, as per agreement, I'm saying apparently, as per agreement, you sold it to a lessor for like 1 crore. Say 10 million, we can say 10 million. But when you apply IFRS 15 to the terms and condition of the contract of this sale and leaseback, you conclude that this is not a sale. Then what will be the treatment? The treatment is, if something is not sold, that asset will remain on your balance sheet. That will not be affected. That will continue the way it was before this agreement. What you will do with the money which you received as a result of this transaction, that money will become your liability. Simple. You have received some money from so-called lessor, and you will be repaying it over a period of time, and that is your financial liability. And financial liability, we know that will be treated under IFRS 9. I suppose this concept is very straightforward, and so far as your question related to IFRS 15 is concerned, that will be addressed in the coming session, but this concept is simple. Okay, now comes to the other concept. If you transfer an asset, and when you apply IFRS 15, you concluded that that this is in fact a sale of asset, and thereafter you leased it back. So this means there are two things. One sale, just one. Okay. There are two things. One is sale and other is lease. Other is lease. And if we want to make a compound entry for these two transactions, the entry will be as this will be the entry. Here we will mention the actual cash which we received as a result of actual cash. Just 1 minute. Here we will mention the actual cash which we received as a result of this transaction, and the new asset is the right of the use asset, and because we are giving up the old asset. Please try to understand the concept. We are retaining and we are selling a part of that asset. That discussion will remain there, but in substance, this is the situation. You are de-recognizing an asset and you are re-recognizing another asset, and whose name is right of use asset. And this is your lease liability. This is your lease liability. And this is the balancing figure. It could be here or it could be here. So we shall understand it with the help of example. How can we determine? This is very simple, isn't it? The cash which we should receive, that will be debited. And the carrying value of the asset, it is available from our books of account. This is available from books of account. Books of account. This is available from there. And this is the actual cash received. You know, because you know from the contract. That this is the actual cash received. And now this can also be determined by calculating the present value of it is not showing up. Present value of lease payments using the definition given by IFRS 16. And these payments are also available from the contract with the lessor. So you can use those lease payment and discount them. You can calculate this figure. Now, what about this? We shall be using a formula to calculate this figure. This means from practical point of view, if you want to account for a sale and leaseback transaction, which is in fact a sale, you can use this compound entry, which is in fact basically derived from the same old concept of part exchange. And we will be, I'll be making you write this formula. But when you will calculate this figure with the help of formula, so this figure will become balancing figure. It could be here, it could be here. So just pass these entries, you have treated your sale and lease back. If you people have any question so far as this discussion is concerned, so please feel free to ask it now, because when I move further, so I'm sure about that you gathered what I said.
Sale and lease back?
Sale and lease back. Only sale and leaseback.
Only sale and leaseback. Hamza already asked that in sale and leaseback situation, company will check the asset of impairment due. Company will also get financial asset on lease contract. Will it be the case?
Sorry?
In sale and leaseback, actually he has not particularly questioned.
Please be particular. What we are discussing, we are basically discussing the treatment. Normally, people feel very uncomfortable with the IFRS 16 so far as the sale and leaseback is concerned. I have tried. I have experimented. I want to make sure that you people are with me so that I could move further.
Nobody popped up, and one of the person is saying Maghrib break. I would request.
Of course, we will be taking Maghrib break after a few minutes, but let me conclude this area. Any question?
No one else.
This means, okay.
Okay, one person is there right now. Shiraz Qadir asked, what formula will be used to calculate value of...
Shiraz, definitely. I'll be telling. Definitely, I'll be telling.
Okay. Now,
okay, this mean so far what I discussed that this is the compound entry for your sale and leaseback transaction where the transfer is a sale, and from where you will get, we are talking in fact practically, from where you will get these figures. Cash, in fact, you know from the contract how much cash you received, and similarly you know about your asset, what is its carrying value, and similarly you can calculate from the contract the present value of the lease payment, which is lease liability, and new asset, right of use asset, can be calculated through using a formula which we will I'll be writing for you in a while, and the balancing figure will be profit and loss account. This means we can move further. Okay.
Moving further, one of the person has asked, sir, if the sale proceeds will reflect the fair value of the asset.
Sanaullah, I'll keep on adding complex things, but this compound entry will cover all the three situations. There are three scenarios. Number one, if the sale proceed equal to fair value, if the sale proceed is more than fair value, if the sale proceed is less than fair value. But for sure, this compound entry will cover all these three. Only there will be a difference of formula. Formula for when the sale proceed is equal to fair value is different. When the sale proceed is more than or less than the fair value, the formula will be different. Compound entry will remain same, only there will be a difference of formula.
Said, thank you.
You will. Okay. We are here. See, the seller lessee shall, okay, we can go to the example. Illustration. Illustration number 15. You people must be having illustration number 15. Illustration number 15. Illustration number, I suppose it should be here. We have illustrations here. Yes, illustration number 15. This is illustration number 15. Here you can see that if the transfer of an asset is sale, then the lessee accounting can be explained by the following illustration. A Limited has an asset whose carrying amount is 1 million. So this is from your books of account, and fair value of this asset is 1.8 million. It is sold to B Limited for 1.8 million. This means the question does not arise in like fair value above and below. It is sold at fair value, at the market value, and then leased it back for 18 years with an annual payments of 103,553 payable at the end of each year. The interest rate implicit in the lease is 4.5% per annum. The present value is already calculated. How this present value is calculated? This present value is calculated by discounting this figure over a period of 18 years. So this will give you 1,259,200. So our entry will be, if we just copy our last entry from here. So our entry will be, just 1 minute. Yes. No, I have made an entry here. Our entry will be C. You have received cash. Your cash is debit. I'll be converting it into red. Let me. Okay. So I think there should be no confusion about, so far as in this illustration, the entry will be 1.8 million we received in cash, and this is the carrying value of our asset we given up. And this is the present value of the lease obligation. Though it is given over here, you can calculate it by applying this discount rate to this value over a period of 18 years. So this means these three figures are there. Now we shall be learning the formula to calculate this value. This will become automatically the balancing figure. Now what will be the formula? The formula will be I can write over here. The formula will be the situation is like sale proceeds equal to fair value. This is the situation. I will mention over here, this is situation number 1. What will be the formula? Formula will be, and formula is for right of calculation of right of use asset will be equal to present value of or instead of mentioning present value, I need something else. I cannot see here razor. I can see here. Anyway, it should be the lease liability. Divided by fair value into carrying value of the asset. So if we apply this formula to this situation, here the lease liability is 1,259,200. Fair value is 1.8 million into carrying value is 1 million. This will give you the right of use asset, which is 699,556. See, respected members, this is one way of accounting for sale and lease back, which is a sale. There are other things. There are other ways as well. For example, even you can calculate profit or loss on this disposal, and then you can put figure over there, and the balancing figure will become right of use. Mean you can calculate any of these two figures. But in this current session, I'm only focusing on this approach, whereby you calculate right of use asset by applying this formula. You people can note this formula. Okay. Now this situation is number 1, where sale proceed is equal to fair value. Now, if sale proceed is more than the fair value, see, for this is the entry for the lessor, because he has paid cash and in return he has received the cash. And thereafter he will be treating it. I mean, we are not discussing right now the lessor because this will mix up our concept right now. So this first formula you might have noted. Then is the other two situations, like if fair value is lower than and the fair value is higher than the fair value. Say proceed is higher than the or lower than the fair value. This is the example where you can see that this is the same example. This is the fair value, same asset, same fair value, but it is sold for more than fair value. It is sold for more than fair value. Standard says the higher amount will be treated as advance payment of the lease liability. Okay. Okay, we do not enter into a complex discussion. We were actually, our target was to learn the compound entry. Okay, what will be the compound entry here? See, the compound entry will be, I suppose the answer should be here. The compound entry will be like you are receiving cash, so the cash will be debit. Cash will debit. Compound entry will be debit cash. Debit cash account. Of course, this is the amount of cash which you received. Then we know that there will be a right of use asset. Right of use asset. We are discussing lessee, in fact. Right of use asset, we shall be using the formula for this. Credit asset carrying value. Here in this case, the asset carrying value is 1 million. And then there will be lease liability. Lease liability. And then there will be a profit or loss. If it is a profit, it will appear here. If it is a loss, it will appear here. Okay, so what will be our lease liability? This is illustration number 16. Okay. Our lease liability will be here. We will be calculating it with the help of calculating the present value of. You will be paying how much? 120,000. This much you will be paying over a period of 18 years, and we shall be discounting it at 4.5%. This will give us 1459200. So this will become our lease liability. 200. Now, what will be the formula for right of use asset? See, the formula will be, now this is situation number 2. This is situation number 2. Let me change the ink. This is situation number 2, whereby fair value is lower than the sale proceeds. Fair value is lower than the sale proceeds. Here formula will be, formula is equal to lease liability, as you calculated very simply by applying the discount rate to the fixed lease payment over the period of lease term. Lease liability minus A divided by fair value into carrying value. If we apply this formula on this situation, we will get After this, we will making break for prayer because time is like we changed this. We can use the same black because visibility of the black is good. Okay. So if we apply this formula, this will give us lease liability is R1459200 minus A. What is A? A is in fact, please note it, A is in fact equal to sale proceeds minus fair value. So sale proceed minus fair value is 200,000 divided by fair value into carrying value. This will give you 699,556. Now the balancing figure will be 240,356. Because this is being recorded as well, so you can see the recording as well to just revise the discussion. Now we shall be having Maghrib prayer break. Thereafter, we will be resuming this session. Thank you. Okay. Now another situation is where we have discussed where fair value is equal to the sale proceeds, and this is the situation where sale proceed is more than the fair value. So there, this will be the formula, and this will be the double entry for this transaction. Then is the third situation. Third situation is the same example, carrying amount 1 million, fair value 1.8 million, 1.8 million, and it is sold to B Limited for 1.6 million. Here we can see that the situation is like fair value, it is sold for less than fair value, and then leased it back for 18 years with annual payment of 87,105 payable at the end of each year. The interest rate implicit in the lease is 4.5% per annum. 4.5% per annum. The present value of 18 installment will be like this is calculated. You can calculate yourself by applying this 4.5% to 87,105 over a period of 18 years. So this will give you 105 and 200. Now, what will be the double entry? See, this is our third situation. The situation is whereby this is the third situation where fair value of the asset is more than the sale proceeds. In this situation, the formula for right of use asset will be, this will be the formula, right of use asset will be lease liability lease liability plus lease liability plus, okay, it should work, yes, plus B divided by fair value of the asset into carrying value of the asset. So this will give us, in this situation, as it is already there, they have lease liability is already calculated, that is 1,059,200 plus B. What is B? B is the difference between these two, and the difference is 200,000 divided by fair value into carrying value. Because I have used the same example to illustrate these three different situations, don't get confused in any situation where even these figures are different. You can confidently apply this same formula. Now see, the double entry will be, become, like we can see over here, we have received how much cash? We have received cash. Just 1 minute, let me select the ink. Okay, we have received cash, which is, of course, 1.6 million. 1.6 million. Then right of use asset we have calculated from formula. Right of use asset we have calculated, and that is, if we calculate this, if we perform calculation on these figures, so this will give us 699,555 credit asset. We know that this will be credited with the carrying value, and that is there 1 million. And then lease liability will be credited. Lease liability will be credited. And that we have calculated 1,059,200. And the balancing figure here in this case is 240,350. The important thing is not that in all these three situations the profit is same or something like this. The important thing is that you must remember that this basic concept. What is that basic concept? In fact, the basic concept is, as we have started discussion from here, I suppose. Basic concept is that, like, this is the entry for sale and lease back. In fact, this is the entry for sale and lease back. When the asset is sold. When the asset is sold. This is in fact the entry, which you can see as a part exchange. Only what we did, we learned this formula, very simple formula. Like in three situations, we learned the same formula. Like if I use the word lease liability, for lease liability, if I use the word LB, so the formula we have seen in three different illustrations. Simply apply that formula, calculate lease liability, put the figures at the right place, and the balancing figure will be your profit and loss account. So this is the whole story behind sale and lease back, which is in fact a sale. Okay, let's move. If anybody has any question related to sale and lease back, we can answer. Okay. Or I try to make it as simple as possible. When you will going through this, practically you can apply this approach to account for your sale and lease back if there is any. Okay, now comes to the slides. We have discussed illustration 15, not sale. We have discussed effective date and transition. An entity applies IFRS 16 for annual reporting period beginning on or after 1st January 2019. Earlier application is permitted if IFRS 15 revenue from contracts with customer has also been applied. This is very important. If you want to apply it earlier than its effective date, then you will have to first apply IFRS 15. Only then you are allowed to apply this standard earlier than its effective date. As a practical expedient, an entity is not required to reassess whether a contract is or contains a lease at the date of initial application. I mean, when you are applying this standard initially, if you have already treated it as a lease, you can continue with that. But the important thing is, you have various options. On 1st January 2019, you can go for full retrospective effect, or alternatively not restate comparative information but recognize the cumulative effect of initially applying IFRS 16 as an adjustment to the opening year. This means you will have to perform the calculation, and if you don't want, standard allows you not to restate your previous year figures, but the effect of this new standard can be adjusted. Mean the effect related to the figures related to those agreements which are outstanding on 1st January 2019, that effect can be adjusted in the opening balances. But you can go for the full retrospective treatment as well. So this is very important. So here, this means a significant exercise will be required to be undertaken at the start of 2019 by those companies where leases are being used to greater extent to finance their assets. So this was our today learning objective 2. In total, third learning objective now comes to the today's last learning objective, and that is the treatment of lessee treatment, in fact, because lessee treatment is the same as in case of IAS 17. To greater extent it is same. So I want to quickly revise the lesser treatment for you, though it is given, but the same is adopted. You know there are 4 types of lessors: finance companies, hire companies, manufacturer, dealer, lessor, property companies. From our accounting point of view, we normally there are 2 types of lessors. See, for hire company, they normally go for the operating lease and things like this. For us, there are 2 types of lessors. One, who provide us the money. So, in fact, they are providing us the money. Even if they give this money directly to the dealer or manufacturer from whom we are buying the asset, but in fact, like the example is bank. Very typical example is bank. Bank is not selling anything. Bank is not supposed to sell any asset. Whenever you go to a bank for leasing an asset, in fact, they are providing you a finance. So we will treat it as one type of lessor, as a finance companies. And there are lessors who are in fact dealing in those types of assets, and like manufacturer or dealer of cars. If you go to a dealer of car and want to lease a car from that dealer, so this is another type of asset, another type of lessor. For finance company, they are in fact giving the money and they want return on that money. So they are investing an amount and they want return higher than that. So that will be a financing arrangement. In case of dealer, lessor, manufacturer, in fact, they are selling an asset at a delayed payment. So when they lease an asset, they will be recognizing it as a revenue, and they will be recognizing the cost of sale as well. And this will be a deferred receivable for them. Like, for example, if we just discuss finance lease, like banks, so this will be their entry. The amount which they have paid, either in the form of either to cover the fair value of that asset plus any other expense which is necessary for that asset. So that will be credited, and this is in fact their investment, because they are not selling an asset, they are making an investment. So this will be the basic entry, initial recognition. And with the help of this example illustration, we can quickly look at this concept. A lessor agreed to lease machine commencing on 1st January 2011. Annual lease payment 18,000 paid in arrears. Lease period 6 years. The fair value of the machine at the commencement of the lease was rupees 80,000, and lessor incurred initial direct cost of 2,000 when arranging the lease. The estimated residual value of the lease at the end of the lease is 8,000, and the lessee has guaranteed this amount, but the lessor is sure that the asset could be sold at 10,000. So interest rate implicit in the lease. So this will be the entry. Initial recognition, debit 82,000, credit 82,000 with cash, because this is their investment. 82,000 is their investment here. And then another definition, and this is another definition you can see later on. So, okay, after initial recognition, what you will do, this is the 82,000 you initially recognize, thereafter 18,000 received, and you calculated the finance income based on implicit interest rate, and this is the partial repayment. In fact, when you will be adding these two, this will become 18,000, so this will give you the closing investment in the lease. This will appear in the balance sheet, of course, bifurcated into long-term and current portion. We know this from International Accounting Standard 17, so that's why I just want to remind this, because this is the same in IFRS 16 as well. In 6, this will be the amount. This is the unguaranteed residual value after. So this is the presentation in year 1, finance income, and similarly the other value. This will be the presentation. You can see that this is the disclosure, and this is the same in IFRS 16 as well. Now the dealer manufacturer. See, if you are a dealer or manufacturer of an asset and you lease that asset, this is simply your revenue and cost of sales. So you on lease, instead of making an entry like banks do, you will be recording this transaction as a sale. And when there is a sale, there is a cost of sale. So these will be the entries. Lease receivables. Only when you make a sale, what you do, you make an entry receivable debit, revenue credit. Here, the same is the receivable, but in order to differentiate it from other receivable, just we mentioned the word lease receivable. So this will be the entry, and at what amount, fair value, lower of fair value of asset, and the present value of minimum lease payment at market interest rate. And then cost of sale. This is interesting. If there is the unguaranteed residual value, so this will be the formula for recording the double entry of cost of sale. So as this and cost of setting up the lease will be charged to the profit and loss account. This can be treated as a marketing expense. Like you have here an example, like which you can see that, because solution is also provided, and this is not different from the earlier treatment of International Accounting Standard 17. So the disclosures are given, and this was the whole session. Covering the last session very quickly, just because you people are doing these treatments from many years under IAS 17, and there is no difference between this treatment under IFRS 16. But having said that, because these slides include illustrations with their solutions, with other notes, so you can go through those slides recording in order to revise this concept if you are not very clear on any of the aspect. Can you? Okay, so this is all about our session. Certificates of this session will be sent by the ACCA people. And now I will request Mr. Haroon to continue from here onward, because people will be asking for the certificates and for they may be having other questions like slides and things like this. So I request Mr. Haroon to come over here and answer these obvious questions from participants. All right. And from my side, thank you very much for your participation.
Thank you very much, Mr. Abu Bakr. I hope this was an interesting session. From the amount of conversation happening, the questions being thrown in, I can well imagine that this was very, very interactive, and a number of participants who attended it. I'll very quickly preempt some questions and answer them. Number one, the recording of both these sessions. I mean, yesterday's recording, like Mr. Abu Bakr said, had a bit of technical glitches in it, so, but still it's there. Today's recording as well will be made available on GoToWebinar, and you will automatically be notified by the GoToWebinar software about where the recording has been placed. You can go and watch it as many times as you want. Those who have attended this training live, which means today's session and yesterday's session, those who have attended it live, we will get a report from GoToWebinar on how many people have attended it for how long. So all of you who attended it live will get your certificates in a day or two. Those who have not been able to attend it live, but they are able to watch the recording, they will not be issued certificates. And this was something that was discussed with me, a number of occasions. But so far, our capacity, does not allow that. The technical solutions that we are using right now does not give us sufficient information about how many people have attended viewed the recording afterwards, and for what duration. And therefore, since this is a requirement by IFAC that there has to be an evidence of somebody having attended a duration of the training, right? And that's why that sort of restricts us not to issue certificates in that case. So therefore, those who have attended it live will be able to claim verifiable CPD units by having attended this webinar. Those who will watch the recording can claim non-verifiable CPD units. But more importantly, CPD units, CPD claiming fine is a requirement. But I think more importantly, it is the knowledge that has been imparted. So we feel that the knowledge being imparted to you through this forum is what will add value to your careers, to your workplaces, to your colleagues who have attended. So that is what we are more interested in. That's what we're more keen about. If there are any more questions, you can type in now. We'll just take a minute or so to see if there are any more questions that can be answered. Can we have a look at the questions? And otherwise, if there are no questions, we will then call it off. And
Aruj Razak asked, where is the recording available on GoToWebinar?
You will receive an automatic update, I think within an hour or so. You will receive an update just as the recording is prepared by GoToWebinar servers. An update is sent to all the live participants of that webinar. So please look out for an email coming to you from the GoToWebinar team, and they will have the link of the recording embedded in that email.
Shahzad Khuram asked how we will get the certificate.
You will receive the certificates in your email. A soft copy of the certificate is going to be sent out to all the live participants, like I said.
I think no more questions.
All right, great. I think that's all about it. Thank you very much for your participation once again. Our next webinar is scheduled for let me just remind all of you. You can do it schedule.
Let me share. We will be having another webinar on share-based payments.
What date is it?
Scheduled is for 21st of March 2018.
All right. So 21st March 2018, same time, we will be running a webinar on share-based payments. And how many webinars are these on this subject? Only one. So only one webinar for 3 hours, same timing. We will be running this webinar, on 21st. Now, the emails for registrations have been sent out. We have received about 1,300 registrations. So we once again look forward to welcoming you to this forum once again on the 21st. Thank you all very much. It was a pleasure having this session with you today, and hopefully you would have enjoyed the sessions as well. Take care of yourself and have a nice weekend.